In this part, we are going to talk about the exchange of a plant asset. Usually, a company exchanges its plant asset with a new plant asset that will provide the company with higher productivity and higher efficiency during its work. However, this exchange may result in a gain or may result in a loss. Please open your book on page 35. Here we have an example where a truck was purchased on January 1, 2017 for $40,000. It has an expected useful life of 4 years with no salvage value. However, the company on June 30, 2020 decided to exchange the old truck with a new one by paying $2,000 and giving them the old truck. On the day of exchange, the old truck had a fair value of $8,000. Fair value means the market value. So, on the day of exchange, which was June 30, 2020, the market value of the old truck was $8,000. So, the first step is the same step as in the retirement as in the sale. We need to calculate the depreciation expense during the year of exchange, which was June 30, 2020. Here we also have a partial year, so the annual depreciation expense will be equal to the depreciable cost over useful life times the number of months used over 12. So here we will have an amount of $5,000. The entry will be depreciation expense, accumulated depreciation on June 30, 2020, debit 5,000 and credit 5,000. Step 2 is related to the recording of the exchange of plant asset. As we said, an exchange may result in a gain or a loss on disposal. In order for us to know if we have a gain or a loss, we need to compare the net book value of the plant asset to its fair value. The fair value of the truck is given $8,000, so we need to calculate the net book value, which is the cost minus accumulated depreciation. The cost is $40,000. The accumulated depreciation is $35,000, which is the annual depreciation expense times the number of years the plant asset was fully used, plus the partial year depreciation expense. We will have an amount of $35,000, so the net book value is $5,000. When we compare it to the fair value, it's lower, and so the company is having a gain from the exchange. Why gain? Because the truck was valued as $5,000 in our books. However, in the market, it was valued at $8,000, which is an amount higher than the books. That's why we have a gain. So gain on disposal can be calculated by the fair value, which is $8,000, minus the net book value, which is $5,000. So the company have a gain on disposal of $3,000. We need to record the exchange of plant asset as we did in the retirement or in the sale. The first step, we need to credit the plant asset being disposed, which is the truck in this case, by its cost, which is $40,000. We need to debit the accumulated depreciation, which is $35,000. Here in the exchange, the company paid an amount of $2,000 as cash. So the cash in the company is decreased, and so we need to put it in the credit. We also need to calculate the cost of the new plant asset, and it's calculated by the fair value of old asset plus the cash paid, which is $8,000 plus $2,000 equal to $10,000. The difference between the debit and the credit will be the gain or the loss on disposal. Here in this exercise, we have a gain on disposal, which is $3,000. This is the solution of the exercise found on page 36, but please pay attention that there is a mistake in the book, and instead of December 31, 2020, it should be corrected to September 30, 2020. Here you have the solution for the exercise on page 36. And this is the recording of the exchange. Open your books on page 37. We also have an example. Assume that FixUp purchases a truck for $40,000 on January 1, 2017. That truck has a useful life of 4 years with no salvage value. On June 30, 2020, the company exchanged the truck by paying it $2,000 and giving the old truck. On the date of the exchange, the truck has a fair value of $4,000. In the first step, we need to record the adjusting entry to account for depreciation on the date of disposal, which is partial in this example also. So the annual depreciation expense will be the depreciable cost over useful life times number of months used over 12, which will be $5,000. So depreciation expense $5,000 and accumulated depreciation $5,000. In the second step, we need to record the exchange of a plant asset. As explained, we need to compare the net book value of the plant asset to its fair value. The net book value is the cost minus accumulated depreciation. The accumulated depreciation is $35,000. So $40,000 minus $35,000, we have a $5,000 of net book value. Compared it to the fair value, this amount is higher. The fair value based on the given is $4,000. What does this mean? This means that in our books, the truck is valued as $5,000, whereas in the market it's valued as $4,000. So here we will have a loss on disposal because the net book value is higher than the fair value. The loss can be calculated as the fair value minus the net book value. So we have $4,000 minus $5,000. So we'll have a loss on disposal of an amount of $1,000. And here we have the entry of the exchange of plant asset. The old truck is credited with its cost amount, which is $40,000. We credited the accumulated depreciation, and we need to calculate the value of the new truck. The value of the new truck is calculated by the fair value, which is $4,000, plus the cash amount paid, which is $2,000. So the new truck has an amount of $6,000, which is its cost. We also need to credit the cash paid, which is $2,000. The difference between them will be the loss on disposal, which is $1,000, and we already calculated it as the fair value, which is $4,000, minus the net book value, which is $5,000, and so we have $1,000 as a loss on disposal. And here is the solution for the exercise on page 38 and 39. I also want you to pay attention that there is a mistake in the book, and instead of December 31, 2020, it should be corrected to September 30, 2020.